When you're an employer, you really want to do right by your team, especially with their future, their benefits. But figuring out all the rules, all the information, it can feel like a maze sometimes, just overwhelming. Where do you even begin?
That's exactly the feeling we want to tackle today. We're going to dive deep into the Employees Provident Fund Organization, the EPFO. Think of them as, well, a huge guardian for a big part of India's social security net. Provident fund, insurance, pension, it's all under their roof.
Guardian is a good word for it. I mean, the scale is just incredible, isn't it? Over 64 million members contributing. And the fund size, what is it? Over 17 lakh crores. That's massive. Puts them right up there with global pension funds.
It really does. It shows just how many people rely on this system. And for employers, especially those just getting started with EPFO, understanding their responsibilities is, well, it's crucial. It's not just about checking boxes for compliance. It's about your employees' financial security. So today, we're focusing on the official EPFO info booklet designed specifically for employers of newly covered establishments. Think of this as our guided tour through the must-know essentials.
Exactly, like a shortcut to get you up to speed quickly.
Right.
The EPFO itself calls it a ready reckoner, which is helpful. And it really shows their push towards doing things online, which honestly makes life easier for businesses, right?
Absolutely. Big time. So our mission here is simple. Pull out the critical info from this booklet, the stuff new employers absolutely need to grasp to meet their obligations and make sure their employees get their Social Security benefits. Let's kick things off with the very first step. Getting your business registered.
Okay, first up is submitting this online return of ownership, Form 5A, they call it. Sounds like the formal handshake with EPFO. What details go in there?
You got it. Form 5A is basically the foundation. It tells EPFO who's in charge, the owners, partners, directors, the responsible people. Plus, crucially, your main bank account number, a contact mobile number, an official email, and if you have branches, details about those too.
Okay. So getting that right from the start is pretty important, I imagine. Prevents problems later.
Definitely. Good record keeping from day one saves a lot of hassle.
And it's not a one and done thing, is it? The booklet says you have to update it online if anything changes, like owners or bank accounts.
That's a really critical point, yes. Think of it like your company's profile with EPFO. It needs to stay current. Change of address, new director, new bank, update Form 5A online, use your establishment login. And yeah, you mentioned branches. You can get separate subcodes for them too. Helps keep things organized, especially for larger businesses.
Makes total sense.
Okay.
Moving on. The next big thing seems to be digital authentication, DSC and e-sign. These are like the online signatures we need now, right?
Precisely. In this digital age, you need secure ways to sign off online. Digital signature certificates, DSCs, are like encrypted digital ID cards. You get them from authorized vendors. And then there's e-sign, which uses your Aadhaar number, India's unique ID, to let you sign things digitally, securely.
Okay, so two options there. How do you get them set up with EPFO? Is it all online or?
It starts online through your establishment login, but then, there's a physical step. For both DSC and e-sign, after you start the process online, you print a request letter on your company letterhead. That letter needs a real signature from the authorized person, usually the one getting the DSC, and then you submit 2 copies to your local PF office. They need to verify and approve it.
Okay. So online initiation, then a paper step for verification. And that approval is key because, like the booklet says, all transactions or requests need to be approved by DSC sign.
Absolutely. It locks everything down, ensures authenticity. It's how EPFO protects the process.
So you really can't do much without getting this digital signature part sorted.
Pretty much. Oh, and a quick heads up for DSC users, the booklet mentions some technical things, like needing Mozilla Firefox, a specific version, and 32-bit Java. Just things to be aware of for setup.
Good tip. Okay, let's switch focus to the employees. This universal account number, the UAN, sounds important. What's the deal with that, and what does the employer have to do?
The UAN is a huge deal for employees. It's their single permanent PF identity number. Stays with them even if they change jobs multiple times. Makes managing their PF so much easier.
Portable. That's handy.
Very. Now for the employer, the main job is getting the UAN sorted for everyone. If an employee is new to the system, the employer generates a new UAN for them. The EPFO portal lets you do this one by one or even in bulk upload for many employees at once. Saves a lot of time.
And what if someone joins who already has a UAN from a previous job?
Good question. In that case, the employer just needs to link or map that existing UAN to their establishment in the system. The system checks if the basic details, name, date of birth, gender, match what's linked to their Aadhaar. That match is important.
Right. The booklet also mentions getting Form 11 and KYC documents. What are those for?
Okay, Form 11 is basically a declaration from the new employee. They provide details of any past PF accounts, helps link everything under the one UAN. And alongside that, the employer needs to collect copies of their KYC documents. Know your customer. Think Aadhaar card, PAN card, bank details, proof of identity and address.
And all this KYC info feeds into the next step, Aadhaar KYC approval, using the employer's digital signature.
Exactly. Once the UAN is there, the employer has to go into the portal and digitally approve the employee's Aadhaar KYC using their DSC or e-sign. But it's not just Aadhaar. They also need to make sure other key KYC details, especially the bank account information, are seeded or linked to the UAN and verified.
So linking the account account is also mandatory.
Yes, Aadhaar and bank account are the mandatory ones for smooth processing later on. Again, there are bulk options for linking these, which helps efficiency. You want that employee profile complete and verified right from the start.
Makes sense. Build a complete digital profile. And the booklet mentions checking for missing details.
Yeah, there's an option in the portal to see if any employee profiles are incomplete. Keeping those profiles accurate and up to date is vital for claims, transfers, everything.
And what about when someone leaves?
Another key employer task: mark the date of exit electronically in the portal for any employee who leaves. That triggers the next steps for the employee to claim their funds if they need to.
Okay, what if there's a mistake? Like the name on the Aadhaar doesn't quite match the company records.
Right, discrepancies can happen. Employers can actually verify Aadhaar details through the portal. If there's a mismatch, they should guide the employee on submitting an online correction request. Minor things can often be fixed online by the employee, but bigger changes, like a date of birth correction of more than a year, might need supporting documents uploaded. The employer then reviews and approves the request online before EPFO gives the final okay.
So the employer plays a role in verifying those corrections too. It's quite involved.
It is, but it ensures data accuracy, which benefits everyone.
Definitely a lot to manage on the employee info side. Let's shift gears to the money, the contributions. Who has to contribute and how does it work?
Okay, contributions. It's mandatory for any employee earning 15,000 euros or less per month. They have to be part of the EPF scheme.
And if they earn more?
If they earn above that 15,000 threshold, they can still join, but it's voluntary. It needs a joint request, basically. Both the employer and employee have to agree and formally ask for it.
Got it. And making the payments. It's all online now, you said.
Yep, completely online. Employers use something called the Electronic Chal Income Return, or ECR. Think of it as a combined online form and payment gateway. You file your monthly return details and make the payment through this ECR system, and the deadline is the 15th of the following month.
So by the 15th of June, you pay for May's contributions.
Exactly. And the system allocates the money to the right places. There are specific account numbers for the Employee Provident Fund, EPF,
Right.
the pension scheme, EPS, the insurance scheme, EDLI, and the admin charges.
Right, the booklet lists those account numbers, 1, 10, 21, 2, and 22.
Precisely. And, the booklet is very, very clear on this. If an employer deducts the PF contribution from an employee's salary, but doesn't actually deposit it with EPFO, that's considered a criminal breach of trust. Serious legal stuff. Prosecution is possible.
Wow, okay. So timely remittance is non-negotiable.
Absolutely non-negotiable. It's the employee's money, ultimately.
Are there any exceptions or variations to these contribution rules?
Yeah, a couple of key ones. The 15,000 wage ceiling doesn't apply to international workers. Their rules can be different.
Yeah.
And for the employee's pension scheme, the EPS part, that contribution comes only from the employer side. It's not deducted from the employee's pay.
Ah, okay. Employer pays the pension part.
Right. But there are times when even that employer EPS contribution isn't needed. Like if the employee is over 58 or if they're already drawing a pension from EPS and have rejoined employment. In those cases, the money that would have gone to EPS just gets added to the employer's share of the main Provident Fund account.
It's interesting. And what are the EDLI, the insurance scheme?
The EDLI contribution, that's based on wages up to the 15,000 ceiling, even if the employee's actual PF is being calculated on a higher salary. And interestingly, you still pay the EDLI contribution even if the employee is over 58 and you're not paying into the pension scheme anymore, as long as they're still working and PF contributions are being made.
Okay, that's clear. So we've covered getting set up, managing employee info, making contributions. What about when employees need to access their money? claims.
Right, claims. The big message here from EPFO is do it online. They're really pushing for employees to file all their claims, withdrawal, transfer, pension directly through the online portal. It's just faster, more efficient for everyone.
Makes sense. And the key for the employee to do that is having their UAN activated and linked with their KYC, right? Aadhaar and bank details mainly.
Exactly. That UAN KYC link is the gateway to online services. Without it, online claims aren't possible.
What about transfers? When someone moves jobs?
Online again, ideally. If an employee submits an online transfer request, the employer, both previous and current, potentially needs to digitally approve and forward it through the portal. Employers can track these pending transfers in their login, which helps keep things moving.
And if they do submit a paper form, Form 13.
If it's a manual Form 13, the employer needs to attest it, sign, and stamp it, and then physically forward it to the right EPF office promptly. But online is definitely preferred.
Okay. And just to remind ourselves, what are the main benefits employees get from all this?
Well, there are three core components. First, the Provident Fund itself, the main savings pot for retirement, which can sometimes be accessed earlier for specific needs like housing or medical emergencies. Second, the pension scheme, EPS, which provides a monthly pension after retirement. And crucially, it also offers pensions to family members, spouse, children if the employee passes away. There's a minimum pension guarantee too, currently €1,000 per month.
That family pension is a key safety net.
Absolutely. And third is the EDLI, the insurance scheme. This provides a lump sum payment to the employee's nominee if they die while still employed. The amount is linked to their PF balance, so PF savings, pension income, and life insurance cover. It's a comprehensive package.
It really is, which underlines why getting it right is so important for employers. So flipping that coin, what happens if employers don't comply? What are the penalties?
Non-compliance is taken very seriously. As we mentioned, delayed or non-payment of contributions attracts financial penalties. There are penal damages and penal interest.
Right, I saw the rates in the booklet. The damages start at 5% per year for short delays, but can ramp up significantly, even potentially 100% for longer defaults.
Yes, the longer the delay, the higher the percentage rate applied to the overdue amount. And on top of those damages, there's a flat penal interest charge of 12% per year, calculated daily on the amount due.
Ouch, that adds up fast.
It really does. And don't forget the potential for prosecution for non-remittance of deducted contributions, that criminal breach of trust aspect. EPFO also sends out e-inspection notices online if they detect defaults. Employers need to respond to those promptly.
Definitely strong incentives to stay compliant. Okay, what if a business closes down? How do you close the PF code?
If a business permanently ceases operations, the employer needs to apply to EPFO for deregistration of their PF code. You can't just stop paying, you need to formally close it. This involves submitting an application along with proof that the business no longer exists.
Like what kind of proof?
Things like maybe a dissolution deed for a partnership, proof of surrendering business licenses, or canceling the lease for the premises, documents showing the business activity has stopped.
Right. Initiate that quickly once you close down.
Yes, definitely. Avoids being chased for contributions you're no longer liable for.
Is it possible to keep a PF code open, even if you temporarily have no employees contributing?
Yes, that can happen. Maybe a business pauses operations or has a period with no eligible staff. You can keep the code active, but you have to pay a minimum administrative charge. It's $75 per month currently. You pay this through the same online portal. It just keeps the registration alive in the system.
Okay, good to know. We've covered a lot of ground. If we had to boil it down, what are the absolute core duties employers need to focus on?
Good summary point. The booklet highlights these. First, enroll all eligible employees. That includes contract workers too. Make sure they get these benefits. If you use contractors, you need to ensure they are compliant and link their PF code in your portal.
So responsibility extends to contractors' employees too.
To an extent, yes, ensuring compliance. Then appoint an authorized signatory, that person who handles the DSC sign for all official online actions. Educate your employees, tell them about the benefits, why KYC updates are important, how to check their balance.
Communication is key.
Definitely. Keep your establishment login details secure and confidential. Assist employees with online claims, withdrawals, transfers, pension insurance. Help their families if the worst happens and EDLI claims are needed. And always use the official EPFO website at findia.gov.in for everything. Don't get phished or use unofficial sites.
That's a solid list. The booklet also mentioned an initiative called Prayas. What's that about?
Ah, yes, Prayas. It's a really positive initiative by EPFO. The goal is to get pension benefits released to retiring employees on the day they retire. It requires close cooperation from employers, making sure all the pension paperwork is submitted correctly and well ahead of the retirement date. It aims for a smooth, dignified transition into retirement.
That sounds excellent. A really employee-centric approach.
It is, and it ties back to those final reminders in the booklet. Keep employee details updated, use that missing details function, and critically mark the date of exit online as soon as someone leaves. Accurate data is everything.
Absolutely. So if employers run into trouble or just have questions, where can they go? The booklet listed quite a few resources.
Yeah, EPFO has really expanded its support channels. There's the UMang mobile app for accessing services, a dedicated help desk number, 1-800-11805. The main website, www.epindia.gov.in, is full of information. There are specific grievance portals, EPFGMS, and PG portal for lodging complaints or issues.
Online grievance redressal.
Yep. They're active on social media, Twitter, @SocialEpfo, and Facebook, SocialEpfo. They have physical help desks called facilitation centers at their offices. There's even a WhatsApp helpline now, and a specific email for technical issues with the member portal, member feedback at ipfindia.gov.in. So lots of ways to reach out.
It really sounds like they've tried to cover all the bases for support. That's reassuring. So wrapping things up, this deep dive hopefully has given you, our listener, a really solid grasp of what's expected from employers just starting out with EPFO based on their own guidance.
Understanding these rules, fulfilling these duties, it's really more than just ticking boxes. It's fundamental to your employees' financial well-being, and honestly, it protects your business too from penalties, from legal trouble. You should now have a much clearer picture of your key obligations.
And remember, if you have specific questions, situations we didn't cover, do use those contact methods EPFO provides. They're there to help guide you.
Definitely reach out. And perhaps a final thought to leave you with. Think beyond the compliance aspect. Consider the real impact that managing these benefits diligently, getting contributions right, helping with claims, keeping data accurate has on your workforce. How does ensuring the Social Security net contribute to employee morale, loyalty, and ultimately the long-term health and success of your own business? It connects seemingly small administrative tasks to a much bigger picture.
Welcome. We know you've got a pile of documents about the Employees Provident Fund Organization, the EPFO.
Yeah, there's quite a bit there. Booklets, guides, all sorts.
Exactly. And look, we know you're busy, so our mission here in this deep dive is to pull out the really important bits.
The stuff you absolutely need to know, maybe even some things that might surprise you.
Right. From all those sources, the info booklet, the member guide, that review doc, the timeline, even the quiz concepts.
Think of it as a shortcut. We're aiming to get you up to speed on your Social Security benefits without you having to read every single page.
Okay, so where do we start? I guess the scale of it all.
I think that's a great place to start, yeah, because the numbers are, well, staggering, really.
How big are we talking?
Over 64 million members, so 6.42 crore. And the fund size, over 17 lakh crores.
Wow.
It puts EPFO right up there with the biggest pension funds globally.
So this isn't just some small thing. If you're working in the organized sector, this is significant.
Hugely significant. It's likely a major part of your financial planning, whether you realize it fully or not.
Okay, so let's dive into the mechanics. The thing that seems to be central to everything is the UAN.
The Universal Account Number, yes. Absolutely central.
What exactly is it?
Think of it as your permanent PF identity. It's a 12-digit number, and it acts like an umbrella for all your different PF accounts from different jobs.
So you get one number, and it follows you.
Exactly, throughout your entire working life. No more tracking down old accounts from years ago. It's all linked to this one UAN.
That sounds much simpler. But it's not just getting the number right. The documents really stress activation.
Yes, activation is key.
Yeah.
And linking your KYC details, this is crucial.
KYC being?
Know your customer. So primarily your Aadhaar, your bank account details, and your PAN card.
And why is linking these so important? What does it unlock for you?
It basically opens the door to all the online services. Once your UAN is active and KYC is linked, you can manage so much yourself.
Like what? Checking balances.
Checking balances, downloading your passbook, updating details, even applying for withdrawals or transferring your PF when you change jobs.
So it cuts out needing the employer to sign off on every little thing.
Precisely. It puts you, the member, much more in control. Direct access.
That's a big shift. And I saw some really quick ways to check basic info too, like SMS.
Right. For just a quick balance check or to see if your KYC is seated, you can send an SMS.
What's the format again?
It's EPFOHO, then your UAN, then the first 3 letters of your preferred language, like ENG for English, send that to 773-829-9899.
Simple enough.
And there's even a missed call number. Just give a missed call to 9966-044425 from your registered mobile.
And it sends you the details.
Yep, you'll get an SMS back with your PF balance and KYC status. Super convenient for a quick check.
Okay, great. So UAN activated, KYC linked. Let's talk benefits. What do you actually get? There seem to be 3 main parts.
That's right. 3 core schemes under the EPFO umbrella. The first one is probably the most familiar.
Oh.
The EPF scheme from 1952, your Provident Fund.
The basic savings bond.
Exactly. You contribute, your employer contributes. It's designed as a long-term retirement savings tool.
And the interest rates are usually pretty decent, right? Compared to, say, bank FDs.
Historically, yes. Often quite attractive, aiming to provide a good return over the long run. It's meant to be a solid investment instrument for retirement.
But it's not just for retirement, is it? I was surprised by the rules on partial withdrawals during your service.
Yes. This is a really important feature, and maybe one people don't always know the details of. You can access funds mid-career.
Non-refundable withdrawals, it says.
Correct. Non-refundable advances for specific purposes, and often you don't even need supporting documents anymore, especially for online claims.
Like what kind of purposes? Building a house.
Definitely. House purchase or construction is a big one. You need 5 years of membership, but you can potentially withdraw quite a bit.
How much?
Up to 24 times your monthly basic salary plus DA for a plot, or 36 times for constructing or buying a house or flat, whichever is less between that and the actual cost or your total share.
That's substantial. What else? Medical needs.
Yes, medical treatment for yourself, spouse, children, or dependent parents. There's no minimum service required for this, which is good.
And the limit there.
It's the lower of your total employee share with interest, or 6 times your monthly basic plus DA.
Okay. Any others that stand out?
Well, there's one for just before retirement. Within 1 year of retiring, you can withdraw up to 90% of your total PF balance.
Helps with planning that final transition.
Exactly. There's also one for house renovation needs 5 years membership. Limit is 12 times monthly salary.
And things like weddings or education.
Yes. After 7 years of membership, you can withdraw up to 50% of your employee contribution with interest for your own wedding or your child's or sibling's wedding, or for post-matriculation education of your children.
Wow. Okay. That's a lot more flexible than just a locked-in retirement fund.
It really is. And accessing these seems much easier now. Online.
Yes, the push is towards digital. You can apply for most partial or final settlements via the member portal or the Umang app.
And you mentioned the e-passbook.
Right, you can check your statement anytime online. Plus, the system now supports automatic PF transfer when you switch jobs, if your UAN and Aadhaar are linked correctly.
Makes life easier. And you can even contribute more voluntarily, right?
Yes, Voluntary Provident Fund, VPF. You can choose to contribute more than the statutory minimum from your salary to boost your savings.
Good to know. Okay, so that's EPF. What about the second scheme, the EPS pension scheme, 1995?
This one's structured differently, isn't it? The funding source.
Very different. And this is key. You don't contribute a single rupee directly to the employee's pension scheme.
So where does the money come from?
It comes entirely from a portion diverted from your employer's PF contribution, plus a contribution from the government of India.
Interesting. And the purpose is purely pension.
Yes, guaranteed pension after retirement. The goal is to provide regular income in old age. There's currently a minimum pension of 1,000 euros per month, assuming you're eligible.
What makes you eligible? Is it just age?
Age 58 is the normal pension age. But crucially, you also need at least 10 years of eligible service.
Okay, 10 years. What if you leave your job before hitting that 10-year mark? Is the money lost?
No, not lost. You have options. If you have less than 10 years, you can take a withdrawal benefit.
Which is like a lump sum refund.
Sort of, yes. Calculated based on your service and wages. But if you think you might work in another covered job later...
You should probably keep the service record going.
Exactly. You should opt for a scheme certificate. This freezes your service record.
And then?
Then, if you join another job under EPFO later, you can add the new service period to the old one recorded on the certificate.
Yeah.
Hopefully reaching the 10 years needed for pension eventually.
That makes sense. So always aim for the scheme certificate if pension is a long-term goal.
Generally, yes. Preserving service continuity is vital for pension.
And does the pension scheme cover more than just the member's retirement? What about family?
Absolutely. It provides a significant safety net. There's provision for a widow or widower pension if the member passes away.
How much is that?
It's usually 50% of the member's pension, subject to a minimum, currently $1,000 per month.
Okay, and children?
Yes, there are pensions for children up to age 25, 2 at a time, and even orphan pensions if both parents pass away. There are also provisions for disabled children for life and nominee or dependent parent pensions under certain conditions.
So it's quite comprehensive family protection.
It is. And remember, these family benefits are accessed through your nomination. That e-nomination we'll talk more about. That's how your family claims these.
Right, it all connects. Can you get pension earlier than 58 or later for a higher amount?
Yes, both are possible. You can opt for an early pension after age 50, but it will be at a reduced rate.
And deferring.
If you delay taking your pension after 58, say until age 60, you get an enhanced pension, an increase of 4% for each year you defer.
Options there too. And even higher earners can join.
Yes, if you earn above the statutory wage ceiling, you and your employer can submit a joint declaration to join or continue in the EPS.
Okay, good. That covers EPF and EPS.
Yeah.
The third leg was EDLI.
Employees Deposit Linked Insurance Scheme, EDLI, from 1976.
So this is life insurance.
Essentially, yes. It's automatic membership, no extra cost to you. It provides a lump sum payment to your nominee if you die while still in service.
Okay, while in service is important there. How much is the payout?
The benefit is linked to your average PF balance over the preceding 12 months, but there's a defined range. Currently, the assurance benefit is between €2,050,000 and €7,000.
2.5 to 7 lakhs. It's a significant amount.
It is. It provides crucial financial support to the family immediately after a member's death, effective since Feb 2018, those figures.
Right, so UAN links everything. EPF is savings plus withdrawals. EPS is pension. EDLI is insurance. Now, you mentioned e-nomination is key for family benefits.
And the documents are very clear. E-nomination is now mandatory. It's replaced the old physical Form 2.
Why the big push? What does it solve?
Think of it as your official will, specifically for your EPFO benefits, your PF, your pension claims, your EDLI insurance payout. It tells EPFO exactly who should receive the money.
And makes it easier for them to claim.
Massively easier. Because it's done online, verified with Aadhaar, it streamlines the whole process for your nominees if they ever need to make a claim.
Okay, walk me through it briefly. How do you, the member, do it?
You log into the EPFO member portal. Using a computer is usually easier for this. Make sure your photo is uploaded in your profile.
Okay.
Then go to the Manage tab, select e-nomination. You'll need to confirm if you have a family. Then add your nominee details.
What details are needed?
Their Aadhaar number, name, date of birth, relationship to you, their address, their bank account details, optional but recommended, and you need to upload their photograph.
Can you nominate more than one person?
Yes, absolutely. You can add multiple nominees, and this is important. Specify the percentage share of the PF amount each person should get. It must add up to 100%.
Right, so you can split it how you want. And the final step.
You e-sign the nomination. This generates an OTP sent to your mobile number linked with your Aadhaar. Enter that OTP, and your nomination is digitally registered.
So the whole thing relies on Aadhaar for security.
Correct. Aadhaar-based e-sign is the validation.
And the big win for the family is?
If the worst happens, they can file claims online using their Aadhaar OTP. No running around for physical forms, employer signatures. It should be much faster and simpler during a very difficult time.
Makes total sense why it's mandatory now. Okay, so the system offers a lot. It's becoming more digital, but it sounds like the member needs to be proactive too.
Absolutely. You can't just set it and forget it entirely. There are responsibilities on your side to make sure everything works smoothly.
Like what? What are the key things you need to do?
First off, activate that UAN promptly. Don't wait.
And keep KYC updated.
Yes, critically important. Ensure your name, date of birth, gender are consistent across Aadhaar, PAN, and bank records, and match your PF records. Any mismatch causes problems.
Good point. What else?
Guard your UAN password and OTPs like you would your bank password. Never share them.
Standard security practice.
Check your contributions regularly. Log in, view your passbook, make sure your employer is depositing both shares every month. Don't just assume it's happening correctly.
Be vigilant. And job changes.
When you move jobs, make sure you transfer your PF account to the new employer using your UAN. Don't just withdraw it if you can avoid it.
Why is transferring so important?
Because your pension eligibility, that 10-year service requirement, depends on continuous service. Withdrawing resets the clock. Transferring preserves your service history.
Vital for the pension scheme.
And if you somehow ended up with multiple UANs from past jobs, get them merged into your current one immediately. Consolidates funds, ensures correct service calculation.
Okay. Anything else on the careful list?
Be very wary of fake websites or phishing calls asking for PF details or OTPs. EPFO will never ask for sensitive info over the phone or unsecured email.
Stick to the official channels.
Always. The official website is epthindia.gov.in and the official mobile app is UMang.
And reiterate the nomination.
Yes. File your e-nomination. It's arguably the single most important step for your family's financial security regarding your PF benefits.
And if things go wrong, if you have a problem.
Don't hesitate to use the official grievance system, EPFI-GMS.
Right. So if you do have an issue that it's contributions missing, claim rejected, details wrong, what are the ways to get help?
There are quite a few channels now. The main online one is EPFI-GMS, the grievance management system.
How does that work?
You register your grievance online. It uses OTP verification. You get a tracking number. There are defined timelines for resolution, and you can escalate if you're not satisfied.
Sounds structured. Any other routes?
You can also use CPG-RAMS, which is the government's central grievance portal.
Okay.
You can often find direct email addresses for regional EPFO offices on the website if you need to contact a specific office.
What about face-to-face?
Yes, there's Nidiyapkanikat PF near you. It's an outreach program held on the 10th of every month at EPFO field offices. You can go in person.
Good for complex issues, maybe.
Potentially. And they also have a WhatsApp helpline number listed on their site and active Twitter and Facebook accounts for general queries or directing you to the right resource.
So plenty of avenues to raise concerns if needed.
Definitely. They seem committed to providing multiple ways to connect.
Okay, we've covered a lot. The structure, the benefits, the processes, your responsibilities, bringing it all together. What's the main message people should walk away with?
I think the core message is that EPFO offers really substantial Social Security. It's a safety net for your retirement, for emergencies, and for your family.
But it requires you to understand it and engage with it.
Exactly. Understanding how UAN, KYC, EPF, EPS, EDLI, and e-nomination work together empowers you to actually secure those benefits when you or your family need them.
The move online is clearly about making things easier for you, the member.
For sure, convenience is a big driver. But convenience works best when you're informed and proactive, keeping details updated, checking things periodically, doing the e-nomination.
It's active participation in your own Social Security. That's a good way to put it.
So let's leave our listeners with a final thought.
Okay. Consider this. Your UAN isn't just a number. It's, along with all the linked digital infrastructure, your personal key to this huge Social Security system that's constantly evolving.
So the question for you is, what step will you take today, right now, to make sure you're really making the most of it? Maybe checking your KYC status or finally doing that e-nomination.
You know that feeling when you're trying to get your head around something really important for your future, like your retirement savings, but all you find are these massive, complicated documents?
Yeah, it can be overwhelming.
Exactly. So today, we're going to try and cut through all that noise. We're diving deep into the Employees Provident Fund, the EPF.
And the related schemes too, right? The EPS pension scheme and the EDLI insurance.
That's it. Think of this as like your personal audio guide. We want to make sense of it all for you, replacing the need to wade through pages and pages.
Precisely. We've basically sifted through a huge pile of frequently asked questions, the ones that come up again and again, directly from the EPFO, or AIM. Simple. Clear up the confusion, give you the essentials you need to understand how it all works.
Without the headache of reading dense official stuff.
Exactly. Actionable insights, clear language. That's the goal.
Okay, let's unpack this a bit. So what are we actually covering in this audio deep dive? What's the roadmap?
Okay, so we'll start with contributions. Who pays in, how much, especially for maybe daily or piece-rated workers?
Right. And the membership rules, too. Who's eligible?
Yep, membership eligibility, who's in, who's out. Then we get to the good stuff, the benefits, pension, insurance, those early withdrawal options or advances.
And what happens at final settlement?
Definitely. We'll also dig into the universal account number, the UAN, why it's so critical.
And KYC, right. Keeping your details updated.
Absolutely essential. KYC procedures. And then, taxes, TDS, tax deducted at source, how that might apply.
Okay. Anything else?
Yeah, a couple more things. Special rules for international workers, and importantly, what you can do if you run into problems grievance redressal.
And we'll point out some maybe surprising bits along the way, important nuances.
We'll definitely try. So with that map laid out, let's start right at the beginning, contributions.
Okay, so who actually qualifies? What if you're paid daily, for instance?
Right off the bat, yeah. Even if you're a daily wage earner or maybe you're paid per piece of work, you absolutely can become an EPF member.
And how do they figure out the contribution amount then?
It's all based on the total wages you earn within a calendar month. Simple as that.
Okay. Now, here's something I think is really important. What if the employer is late paying that money in? Does the employee lose out on interest?
That's a great question. And no, they don't. This is crucial. You, the member, still get the full interest you're entitled to for every single month the deposit was delayed. That's on top of the normal interest your balance earns.
Okay, so the employee is protected. What about the employer? Are there penalties?
Oh, yes. The employer faces penalties. There's penal interest under Section 7Q and also potentially penal damages under Section 14B of the Act. So the system definitely discourages delays.
Good to know. Are there any situations where PF isn't paid?
Yes. One specific case is during suspension. If you're suspended and only getting a subsistence allowance, no PF contribution is due on that allowance.
And what if you leave your job? Can you keep paying into EPF yourself?
No, you can't. Once you've left service, you can't contribute on your own. Contributions always need that employer component alongside yours.
Okay. Now this next point feels really critical. What if an employer deducts the PF money from your salary, but then just doesn't deposit it?
That's extremely serious. It's a major breach of trust. The EPFO has powers to chase that money down, and they can even file a police complaint. We're talking sections 406, 409 of the Indian Penal Code Criminal Breach of Trust.
Wow. So they take it very seriously. But what if they can't recover the full amount from a defaulting employer?
That's the tough part. While they'll pursue recovery vigorously, the amount you ultimately receive as a member might be limited to what they actually managed to get back from that employer.
Right, okay. And can an employer dip into your PF account if they think you owe them money for something else?
Absolutely not. Legally forbidden. Your PF savings are ring-fenced for your retirement and specific needs. An employer can't use it to settle other debts.
How does the EPFO actually recover money from employers who don't pay? What tools do they have?
They have quite a few options. They can attach the employer's bank accounts, recover money owed to the employer by others, seize and sell the employer's property.
Serious stuff.
Yeah, even arrest and detention in some cases. Plus, legal action under the IPC, CRPC, and specific prosecution under the EPF Act itself.
So how do I, as an employee, even know if my contributions are being paid correctly?
Good question. Your annual PF statement or passbook should clearly show the employer's payments. If there are gaps, it should be obvious.
And with the UAN system now.
Exactly. If your UAN is active, you can check your e-passbook online, often monthly. Plus, many people get SMS alerts on their registered mobile when a contribution lands.
Is my PF money safe if, say, I have other debts and a court tries to claim it?
Yes, it is. Section 10 of the EPF and MP Act specifically protects your PF balance from being attached by any court decree or order related to your personal debts. It's a significant safeguard.
What about if the company itself goes bankrupt?
In cases of employer insolvency or company winding up, The PF contributions actually get priority over most other debts the company might owe. Your PF dues are prioritized.
And just to recap the basic process, the employer has to deduct the PF before paying salary, right?
Correct. It's mandatory. The deduction happens first, at source, before you get your net pay.
Can I choose to contribute more than the standard 12% if I want to save extra?
Yes, you can. You have the option for voluntary contributions above the statutory rate. There might be a cap, possibly linked to the contribution on that RS 15,000 wage ceiling, but it's a way to boost your savings.
Okay, and the pension part, the EPS contribution, do I need to give permission for that?
No, you don't. This often confuses people. The pension contribution, that 8.33%, isn't an extra deduction from your salary. It's diverted from the employer share of the contribution, so your consent isn't required and you can't opt out of it.
What if an employee gets older, say past 58 or 60? Does the employer stop contributing?
Nope. The employer's obligation to contribute continues right up until the employee's last day of service, regardless of their age.
And if someone stops being eligible for the pension scheme for some reason, what happens to that 8.33%?
Good point. If EPS membership ceases, that employer's 8.33% share then gets credited directly to the employee's EPF account instead. So the contribution continues, just allocated differently.
Okay, that covers contributions well. Let's move on to membership and eligibility now. Is there an age limit?
Interesting distinction here. For the EPF itself, there's absolutely no age limit to become a member. However, for joining the pension scheme, the EPS, as a new member, you generally can't join if you're already 58 or older.
Right. And what about salary? You mentioned the Rs 15,000 figure earlier.
Yes. The general rule is if your basic pay plus dearness allowance is up to Rs 15,000 per month when you join, you're eligible, and contributions are typically based on that amount.
But what if my salary goes above 15,000 later? Do I stop being a member?
No. Absolutely not. Once you're a member, you remain a member, even if your wages increase beyond that threshold later on.
What about people who earn more than 15,000 right from the start? Can they join?
Yes, there's a provision for that. It's called paragraph 26 of the EPF scheme. If both the employee and the employer agree, they can jointly opt in. This usually needs to be done within 6 months of joining. It allows higher earners to participate too.
Okay. And apprentices, are they members?
Generally, no, not during the apprenticeship period itself. But as soon as the apprenticeship officially ends, they should be enrolled as EPF members immediately.
So membership is tied to working for a specific kind of company.
Exactly. You need to be employed in an establishment that's actually covered under the EPF and MP Act. You can't just join individually.
What if I work for 2 different covered companies at the same time?
You'd have separate memberships for each one, usually under different PF account numbers or member IDs linked to your UAN.
And just to be super clear, no wages, no PF membership.
Correct. Receiving wages from a covered establishment is fundamental.
And you need to be an EPF member to be in the EPS pension scheme.
Yes, EPF membership is a prerequisite for EPS. You can't join the pension scheme on its own.
What about that rule change in 2014? If I joined after that, earning more than 15K.
Right, that's a key point. If you were hired after September 1st, 2014, and your wages were already above Rs 15,000, you can join the PF scheme, maybe using that para 26/6 option, but you are not eligible to become a member of the EPS pension scheme.
Okay, what if I retire but then take up another job? Can I rejoin the PF?
Yes, absolutely. If you're reemployed after retirement in a covered establishment, you continue as a PF member.
Is EPF membership optional? Can I choose not to join?
Generally, no. For most employees in covered establishments, it's mandatory. You don't usually get an opt-out choice.
And once I'm in, can I decide to stop contributing while still working there?
No, you can't discontinue your membership during your ongoing employment with that establishment.
What if my company has its own private PF trust?
Okay. That's possible if the company's trust has received a specific exemption from the main EPF scheme from the government. In that case, you might stay with the private trust for the PF part. However, even then, you'll usually still be covered under the EPS pension scheme and the EDLI insurance scheme. Those often still apply.
How long does my EPF membership actually last? Can it go on forever?
Technically, yes, there's no fixed time limit. Your membership can continue even after you stop working. But there's a catch regarding interest.
Oh, what's that?
If your account becomes inactive, meaning no contributions are made for 3 consecutive years, it stops earning interest after that 3-year mark. So the membership exists, but the account might become dormant financially.
Right, okay. That makes sense. Let's change gears then and talk about the benefits, what you can actually get out of the scheme. especially those advances.
Okay, yeah. Non-refundable advances. These let you access some of your PF money before retirement for specific reasons. For instance, paying life insurance premiums.
How does that work?
Well, the policy has to be in your name, legally assigned to the EPF's central board, and you need enough money in your own contribution share to cover the premium.
What about housing? Can I use PF for buying or building a house?
Yes, definitely. That's a common one. You can take an advance for purchasing a house or a flat, constructing one, even buying the land.
Are there conditions? Like how long I need to be a member?
Usually, yes. For housing, you typically need about 5 years of membership and a minimum balance, maybe around Rs 1,000 in your share. The amount you can take is often capped based on your wages, your total PF balance, or the property cost, whichever is lowest.
Can I take another advance later for, say, renovations?
Yes. Often you can make further withdrawals for additions or alterations after a certain period, usually 5 years after the initial construction or 10 years after buying.
What about repaying an existing home loan?
That's another possibility, but it usually requires a longer membership, maybe 10 years, a higher minimum balance in your share, and the loan must be from a recognized financial institution. Again, there are limits on the withdrawal amount.
Do I need to submit a ton of documents for these advances?
Actually, for many of these now, especially if applied online, you often don't need to submit physical documents anymore, which is a huge improvement. It makes it much faster.
That's good. What other facilities make managing EPF easier now?
Well, the UAN-based online portal is key. You can view your ePassbook there to see your balance and contributions.
And filing claims.
If your UAN is active and linked with your Aadhaar, PAN, and bank account, your KYC is complete. Basically, you can file many claims online. Final withdrawal, pension withdrawal, those advances we just discussed, often without needing your employer's signature.
That's a big deal, skipping the employer signature.
It really streamlines things. Online PF transfer when you change jobs is another major convenience available through the portal.
You mentioned linking the bank account. Can I update that online if it changes?
Yes. Usually you can update your bank account details via the member portal. The update generally needs approval from your employer, though, unless it's an account with the State Bank of India, SBI. In that case, it can often be digitally verified without employer intervention.
How quickly are claims usually processed?
The EPFO generally aims to settle claims within about 20 days.
But is there a waiting period for withdrawal if they just resign? Not retire, but resign.
Yes, there is. If you cease employment by resignation, you typically have to wait 2 months after leaving before you can withdraw the full PF accumulation. This waiting period doesn't apply if you're retiring on superannuation.
What if my employer refuses to attest my withdrawal form? Am I stuck?
Not necessarily. Ideally, the employer should attest it. But if there's an issue, you can try getting the form attested by the manager of the bank where you hold your savings account. Then you submit it to the regional PF commissioner with an explanation.
But the online route avoids this hassle.
Exactly. If your UAN is active and linked with Aadhaar in your bank account, you can submit the composite claim form, Aadhaar, online, bypassing the need for employer attestation altogether for many claims.
So final settlement happens when I retire, or 2 months after leaving otherwise.
That's generally right. And upon retirement, you might also be eligible for the pension, the EPS.
We'll get to that. But there's also an insurance component, right? EDLI.
Yes, the Employees Deposit Linked Insurance Scheme. If, unfortunately, a member passes away while still in service, their nominee or legal heir is entitled to an insurance benefit.
Is there a limit on that?
Yes, there's a maximum assurance benefit, currently up to our 6 lakh, though the actual amount depends on certain conditions.
Okay, let's dive into the pension scheme, the EPS. Now, how is the pension amount actually worked out?
There's a formula. It's basically your pensionable salary multiplied by your pensionable service, and then the result is divided by 70.
Can you give a rough example?
Sure. Let's say someone joins at 23, works continuously until retiring at 58, so that's 35 years of service, and let's assume their contributions were based on the current wage ceiling of Rs 15,000 throughout. Their monthly pension might be somewhere around Rs 7,500. It's illustrative, of course.
How is that pensionable salary calculated? Is it my last salary?
Not exactly. It's usually the average of your monthly pay, basic plus DA plus retaining allowance, during the last 60 months, so the last 5 years, before you exit the pension scheme.
Always 60 months.
Mostly now, yes. However, for those whose pension commenced before September 1st, 2014, the calculation was based on the average of the last 12 months before exit. So There's a difference depending on when your pension started.
Okay. I've heard about something called a scheme certificate. What's that for?
Ah, yes, the scheme certificate is important. If you leave a job after contributing to the pension fund for, say, less than 10 years but more than 6 months, you might get the certificate. It essentially holds your pensionable service record.
So I can use it when I join a new job.
Exactly. You can surrender it when you join a new covered establishment to add that past service to your new account, helping you reach the 10-year minimum for pension eligibility. It also helps determine family pension if the holder passes away.
What about ex-servicemen if they join EPS after their military service and pass away?
Good point. Since July 27, 2001, the family of a deceased ex-serviceman member is entitled to the EPS family pension in addition to any military family pension they might receive.
Can an individual employee opt out of the pension scheme?
No, individual members cannot opt out or seek exemption. However, an entire establishment or company can apply for exemption from the pension scheme under certain conditions.
When does pension eligibility normally start? Age 58.
Yes, the normal age for superannuation pension is 58, but you do have an option for early pension.
Early pension? How early?
You can opt to start receiving your pension anytime between age 50 and 57, provided you've completed at least 10 years of eligible service.
Is there a downside to taking it early?
Yes, the pension amount is reduced permanently. It decreases by a certain percentage, currently 4%, for each year you take it before age 58.
Okay. What if someone passes away very soon after joining? Does the family still get a pension?
Remarkably, yes. Even if only 1 month's contribution, or even part of a month's, has been paid into the pension fund, if the member dies while in service, the family is eligible for family pension.
Who gets the family pension first?
It automatically goes to the surviving spouse, widow or widower. If there are eligible children under 25, they can also receive a children's pension concurrently, up to a maximum of 2 children at a time.
What about disabled children?
A child with a disability is eligible for a pension for their entire life, and this is paid in addition to any pension paid to other eligible children, up to the 2-child limit.
What if my employer messes up and doesn't pay the pension contributions? Do I lose my pension?
No, and this is a vital guarantee. Your entitlement to pension benefits is protected even if your employer defaults on payments. The non-payment by the employer doesn't stop your pension.
Can I get my pension anywhere in India?
Yes, pension payments are accessible nationwide through designated banks.
And if I worked at several different companies over the years?
Your service periods and wages from different covered establishments are usually clubbed together to calculate your total pensionable service and final pension amount, provided you transferred your accounts correctly.
Does the pension amount increase automatically each year, like with inflation?
No. Currently, there's no provision for automatic annual indexation or increase in the EPS pension amount.
And if I take that reduced early pension, say at 55, can I switch back to the full amount when I turn 58?
No, unfortunately not. The decision to take a reduced pension before 58 is irreversible. You'll continue receiving that reduced amount.
Can I delay taking my pension past 58?
Yes, you can. You can choose to defer taking your pension for up to 2 years until age 60.
Is there any benefit to doing that?
Yes, your pension amount increases by 4% for each year you defer it beyond 58. So waiting until 60 gets you an 8% higher pension.
Can I trade my whole pension for a lump sum payment anymore? Commutation.
No, that facility, known as commutation of pension, where you could get a lump sum up front in exchange for a reduced lifelong pension, was discontinued some time ago under EPS 95.
What if my date of birth is wrong in the EPFO records? Can I fix it?
Yes, you can apply for correction, but you'll need to provide valid documentary proof of your correct date of birth, following the procedures outlined by EPFO.
For children's pension, does it matter if they are married?
No, marital status doesn't affect eligibility for children's pension as long as they are under 25 years old when the member passes away.
What happens if a member had more than one spouse legally? Who gets the pension?
In such cases, the family pension is typically paid to the senior-most surviving widow based on the date of marriage. After her death, it passes to the next surviving widow, if any.
What if there's no spouse or eligible children, and no nomination was made before pension started?
In that situation, if the member hadn't started drawing their own pension yet and hadn't nominated anyone, the family pension can be paid to dependent parents, with the father having priority over the mother.
Can a pensioner nominate someone after they start receiving pension?
No, once a member starts receiving their pension, the nomination facility for family pension ceases.
Do periods of unemployment count towards pensionable service?
No, only the periods during which contributions were actually made are counted towards your pensionable service length. Breaks in service don't count.
Is my spouse automatically the beneficiary for family pension?
Yes, your legally wedded spouse is automatically considered the beneficiary unless there's a legal divorce decree.
What about permanent disability? Is there a pension for that?
Yes, if a member becomes permanently and totally disabled while in service, they are eligible for a disablement pension, regardless of their age or service length. They'll likely need to undergo a medical assessment by an EPFO-approved board.
Why might a pensioner's widow get less pension than the widow of someone who died before retiring?
The EPFO explains this is based on perceived Social Security needs. The logic, they state, is that a pensioner was already supporting their spouse, so upon the pensioner's death, the financial need is arguably for one less person compared to when an earning member dies, leaving the family without that primary income. It's based on scheme design, not just contributions.
Does it matter if the marriage happened after the person retired? Is the widow still eligible?
Yes, the widow of a pensioner is eligible for family pension, even if the marriage took place after the member's retirement.
What if a widow receiving family pension remarries?
Their pension stops upon remarriage. If there were children receiving children's pension alongside, their pension converts to an orphan's pension, which is usually 75% of the widow's original entitlement.
How long does the widow pension last otherwise?
Until their death or remarriage, whichever comes first.
If a member had children from, say, 2 marriages, how is the children's pension decided?
All eligible children under 25 are considered based on their date of birth, and the pension is paid to the 2 eldest among them at any given time.
Does a child need a separate bank account for their pension?
Yes, a separate bank account is required for the child's pension. And interestingly, the widow and all eligible children must receive their pensions through the same bank branch.
That scheme certificate, again, when is it issued?
It's generally issued automatically if you leave service after 10 plus years but before age 58. If you have less than 10 years but more than 6 months, you can apply for one to retain your service record. It's proof of your pensionable service.
Can I get 2 pensions for the same period of work?
No, you can't receive more than 1 pension under the EPS for the same period of service.
Do pensioners need to prove they are still alive each year?
Yes, they need to submit a life certificate, Jivan Praman, annually, usually in November. This can be done physically at the bank or digitally using a TAR, digital life certificate. Failure to submit it can lead to pension stoppage.
What if both parents were EPS members and both pass away? What about the kids?
In that tragic situation, the orphan children are eligible for double the orphan pension amount, essentially receiving the pension entitlements from both parents, subject to overall scheme limits.
What if my employer defaults on paying contributions for a while? Can I get withdrawal benefits for that period?
No, withdrawal benefits are only payable for the periods for which contributions were actually received in the pension fund. You can't claim benefits for default periods.
We mentioned delaying pension past 58. Can I also keep contributing after 58?
Yes, if you continue working in a covered establishment after 58, you can opt to continue contributing to the pension fund, deferring pension start, which results in a higher pension calculation when you eventually retire, up to age 60.
And the thing about restoring commuted pension.
Right, there was an amendment in 2020. For those who had opted for commutation, lump sum, before September 26, 2008, their full pension gets restored after 15 years from the date they took the commutation.
Is there anything to help get the pension started quickly upon retirement?
Yes, there's an initiative called Prayas, which aims to authorize and release the pension on the very day of superannuation, provided the member submits their claim well in advance, usually about a month before retirement.
Okay, great overview of the pension scheme. Now let's talk transfers. How important is it to transfer my PF when I change jobs?
It's incredibly important. Crucial, really. Transferring ensures your entire service history is consolidated. This is vital for pension eligibility, which usually needs that 10 years of total service. Plus, your savings continue to grow in one place, benefiting from compounding interest. Don't leave old accounts dormant.
How is it done now? Is it easier?
Much easier thanks to the online system, but you need a few things sorted first.
Like what?
Your UAN must be activated. Your Aadhaar and bank account details need to be linked and verified, KYC complete. Crucially, your date of exit from the previous job must be updated in the system, and your previous employer should have approved your eKYC.
That date of exit.
Yeah.
You mentioned it has to be updated.
Yes, it's mandatory for online transfers. And you usually have to wait at least 2 months after leaving the job before you can update it yourself, or the employer can update it.
How do I update the date of exit online?
You log into the member portal, go to Manage, then mark Exit. Select your previous PF account, enter the date you left, which can be any date in the last month of contribution, and the reason. You'll get an OTP on your Aadhaar-linked mobile to authenticate it.
And once it's updated, it's final.
Yes, be careful, as it generally cannot be changed once submitted through this process.
How do I know if the transfer actually went through successfully?
Check your ePassbook on the member portal, log in, view passbook. You should see entries for all your previous member IDs. If the transfer is complete, you'll see a credit entry for the transferred amount in your current passbook. If old passbooks still show balances, the transfer probably hasn't happened yet.
When I file the transfer online, do I still need to print and submit Form 13?
Generally, no. If you complete the entire process online, including Aadhaar-based verification, the physical form submission is usually not required anymore.
Can I track the status online?
Yes. On the member portal, under Online Services, there's a Track Claim Statuses option. You'll see if it's pending with the employer, accepted by them, and then pending at the field office.
What if I have a more complicated situation, like having 2 different UANs assigned to me somehow? Can I still transfer online?
No. That's a situation where online transfer usually doesn't work. If you have multiple UANs with different member IDs linked, you'll likely need to use the offline process.
Which involves
downloading the physical Form 13, filling it out with details of both previous and current employment, getting it attested by an authorized signatory from either employer, and submitting it to the relevant EPFO field office.
And after the transfer, I should sort out the UAN situation.
Definitely. Once the funds are transferred, make sure your KYC is fully updated on your current primary UAN. And always provide that correct UAN to any new employer to avoid getting another one. The goal is that one member one EPF account concept.
Okay, that leads us perfectly into talking more about the UAN itself. What exactly is it again?
So the UAN Universal Account Number is that unique 12-digit number given to every EPF member. Think of it as a permanent ID for your entire EPF journey. It acts like an umbrella, linking all your past, present, and future PF accounts, member IDs, from different jobs under one number.
So I keep the same UAN even if I change jobs multiple times?
Exactly, that's the whole point. You provide your existing UAN to your new employer.
How do I find out what my UAN is if I don't know it?
You can find it online easily. Go to the EPFO's Unified Member Portal. There's an option usually under Know Your UAN. You can search using your member ID from your payslip, your Aadhaar, or your PAN.
What details do I need?
You'll need your name, date of birth, registered mobile number, and the CAPI TCHA code. Click Get Authorization PIN, enter the OTP sent to your mobile, and boom, your UAN is sent via SMS.
Okay, once I have the UAN, what's the next step? Activation.
Yes, activation is key. Also done online, either via the EPF member portal or the UMANG app. Look for the Activate UAN link. You'll need your UAN or member ID, Aadhaar or PAN, name, DUAB, mobile number. Again, you'll get an OTP to verify, and once done, your UAN is active, and you'll get a password to log in.
Can I link the same mobile number to more than one UAN if, say, I accidentally got 2?
Interestingly, yes, the system does allow one mobile number to be linked with multiple UANs, though ideally you should consolidate everything under one UAN.
Is there any offline way to register or activate the UAN?
No, the entire process for UAN registration and activation is purely online now.
Does this apply to contract employees too?
Yes, absolutely. Contractual employees in covered establishments are also eligible for a UAN and can access all the online facilities once activated.
What if, way back, my employer linked my UAN to the wrong other number by mistake? How is that fixed?
That requires contacting the regional EPFO office where your account is maintained. You'll typically need to submit a joint request form along with your employer to get it corrected.
Why is linking KYC details, Aadhaar, PAN, bank accounts so important?
It's crucial because most online services depend on it. Linking these details allows you to update information, file claims online, transfer funds easily, view your passbook, and more. Without linked KYC, your access is very limited.
How do I link them?
Log in to the member portal, go to Manage, then KYC, select the document type, Aadhaar, PAN, bank, enter the details exactly as on the document, and save.
Does the employer need to approve it?
Yes. Your request will show as pending for approval until your employer digitally approves it using their DSC or e-sign. Aadhaar verification also happens with UIDAI in the background.
What about linking the bank account specifically?
Similar process. Enter account number, IFSC code carefully. You'll get an OTP on your Aadhaar-linked mobile for verification. Then employer approval is needed, unless it's SBI, which might get verified digitally by the bank.
Can I change my linked bank account later?
Yes, you can update it following the same process, but you usually can initiate a change if you have an existing claim already being processed.
Any precautions when adding bank details?
Absolutely. Make sure the account is active and in your name. The name must match your PF records precisely, or claims might fail. Also, ensure the account doesn't have deposit restrictions that are lower than potential PF withdrawal amounts.
Do I need to activate my UAN every time I change jobs?
No, activation is a one-time process for your UAN.
And does UAN registration cost anything?
Nope, it's completely free.
Can you list some key things I can do through the UAN member portal?
Sure. File your e-nomination, request basic detail corrections, name, DOA B, gender, update KYC, transfer PF online, file claims, withdrawal, advance pension, submit Aadhaar-based claims, update your date of exit, download your e-passbook and UAM card.
Wow, quite a lot. Can I check my balance via SMS or missed call too?
Yes, if your UAN is linked with KYC, you can send an SMS in a specific format to a number, or give a missed call to another number and you'll receive your latest balance details.
What if I need to change my date of birth and it's a big difference, say more than 3 years from what's on my Aadhaar?
In that case, besides the online request, you'll likely need to upload a supporting document that confirms the date of birth as per your Aadhaar.
What's the absolute minimum KYC I need linked for online services?
Your active mobile number, your Aadhaar, and your bank account number. Those three are generally essential.
Is linking PAN really necessary? What's the benefit?
It's highly recommended. The main benefit relates to TDS. If you withdraw PF before completing 5 years of service and the amount is taxable, having PAN linked usually results in a lower TDS rate, like 10%, compared to a much higher rate if PAN isn't linked or is invalid.
Can I update my PAN and bank details myself?
Yes, you can initiate the update request on the portal yourself. But remember, these specific updates, PAN and bank, will still need digital approval from your employer.
What if my employer doesn't update my date of exit after I leave? Can I do it?
Yes. If 2 months have passed since your last day of work, you can usually update your date of exit yourself online through the portal using your Aadhaar OTP verification.
What if I change my mobile number, the one linked to UAN?
You can update that too. Log in, go to your profile section, and there should be an option to change the registered mobile number.
But for online claims, the OTP goes to the Aadhaar linked mobile, right?
Correct. That's a key distinction. For claim submission requiring OTP verification, it uses the mobile linked with your Aadhaar, not necessarily the one just registered on the UAN portal, though ideally they should be the same.
What if my Aadhaar isn't linked to any mobile?
Then you'll need to visit an Aadhaar enrollment or update center to get your mobile number linked to your Aadhaar first. You can't do online claims needing Aadhaar OTP without it.
What if I forget my UAN portal password?
Easy fix. On the login page, click Forgot Password, enter your UAN and cap TCHA. An OTP goes to your UAN registered mobile, enter that, and you can set a new password.
What if my registered mobile number itself is changed and I forgot the password?
There's usually a recovery option for that too. It involves verifying your identity using your basic details and Aadhaar number. Once verified, you can enter a new mobile number and then proceed with the password reset.
So when I join a new company, what's the main thing I need to do regarding PF?
Just give them your existing UAN. That's it. They'll link your new member ID to your existing UAN.
Which claims can I file online?
Generally, final PF settlement, Form 19, pension withdrawal benefit, Form 10C, PF partial withdrawal advance, Form 31, and transfer requests, Form 13. Pension claims, Form 10D, can also often be filed online after completing a nomination.
How do I see or download my passbook and UAN card?
Log into the member portal. There's usually a view menu for the passbook and a download menu for the UAN card.
Why might my passbook not be available online?
The most common reason is if you work for an exempted establishment, one that manages its own PF trust. In that case, the EPFO portal won't have your detailed passbook. You'd need to get your statement from your employer trust.
If I find out I have 2 UANs, what should I do?
You need to get the service history and balance from the older incorrect UAN transferred to your current correct UAN. Use the online transfer claim process, Member 1 EPF account feature if possible, or the offline Form 13 if needed. Then ensure the old UAN is deactivated.
Why might I have trouble linking a previous member ID to my UAN?
Usually due to mismatched details, name, father's name, date of birth, date of joining, leaving, might not align perfectly between the old record and your current UAN profile. These mismatches need correction first.
How do I correct my name or date of birth in EPFO records to match my Aadhaar?
You can initiate this online via the member portal. Manage, modify basic details. Enter the correct details as per Aadhaar. The request usually goes to your employer for verification and then to the EPFO field office for approval. Supporting documents might be needed depending on the change.
What about international workers without Aadhaar? Can they file online claims?
Generally, no. Since Aadhaar OTP is central to most online claim authentications, IWs without Aadhaar typically need to submit physical claim forms attested by their employer.
Do I have a right to ask my employer for proof they actually deposited my PF contribution?
Yes, absolutely. You can request a copy of your Form 3A, which is like an annual statement, or a copy of the monthly electronic Challan Cum Return, ECR, which shows the deposits made for all employees.
How do I transfer the balance and service history to my current UAN? Is it one process?
Yes, the standard transfer process, online Form 13 ideally, transfers both the accumulated PF balance and the corresponding period of service history from the old account to the new one under your current UAN.
Can I update my date of exit online even after 60 days have passed?
Yes. The facility for members to update their own date of exit, if the employer hasn't, typically becomes available after 60 days, 2 months, from the date of leaving.
What if the date of exit or date of joining is wrong or missing entirely? Who fixes that?
If it's incorrect or missing, the employer needs to submit a joint declaration form or request to the relevant PF office to get it rectified in the EPFO records. The member usually can't fix incorrect dates entered by the employer.
Does my employer need to approve my e-nomination or changes to it?
No. E-nomination is based on your Aadhaar e-signature. Once you submit it online successfully, employer approval is not required.
If I have a very old PF number but no UAN, can I generate one myself?
You can try using the Know Your UAN facility with your old member ID. If your details in the old record match what you enter now, a UAN might be generated or shown. If data doesn't match, you'll likely need your current or previous employer's help to generate the UAN with correct updated details.
What if a member dies, their name is slightly different in PF records versus other documents, and there's no e-nomination? How does the nominee claim?
That can be tricky. The nominee will likely need to submit a physical claim form, get it attested by the employer, who can certify the deceased member's identity, and provide supporting documents like death certificate, proof of relationship, and potentially an affidavit explaining the name discrepancy.
How do I link 2 old PF accounts to my single UAN and correct my name as per Aadhaar? What's the sequence?
Generally, try to link your UAN with Aadhaar first if the name mismatch isn't too drastic. Then initiate the name correction request through the portal, which needs employer EPFO approval. Once the name is correct, initiate the transfer claims, Form 13, to bring the old accounts under the corrected UAN profile.
If my name doobie is wrong on my Aadhaar card, who fixes that?
That's outside EPFO's scope. You need to contact UIDAI, the Aadhaar authority, to get your Aadhaar details corrected first. Once Aadhaar is correct, then you can get your PF records updated to match it using the joint declaration process via your employer.
How does an employer register their digital signature, DSC, on the portal?
There's a specific procedure on the employer portal for registering their DSC or opting for Aadhaar-based e-sign for approvals.
If a member dies with a valid nomination, can the PF office add other family members later for pension?
Yes. While the existing nomination determines the PF-EDLI beneficiary, the EPFO office can add details of other eligible family members, like spouse, children, based on submitted documents, specifically for determining eligibility for the Family Pension Scheme, EPS.
Does having different addresses on my Aadhaar and PAN stop me from getting a PF advance?
Generally, no. Address mismatch between these two documents usually doesn't block PF advance applications as long as other KYC like Aadhaar and bank account are properly linked and verified with UAN.
What does the Aadhaar authentication error PI, basic attributes of demographic data, did not match mean?
It means your basic demographic details like name, date of birth, gender, in your UAN profile don't exactly match the details recorded against your Aadhaar number in the UIDAI database. You need to get your PF records updated to match Aadhaar precisely.
Why isn't death an option when I try to update the date of exit?
Because marking an exit reason as death needs to be done by the employer through their login, usually after receiving confirmation like a death certificate. It's not something the member or their family using the member login can update directly.
If I've lost all details of an old PF account, how can I find it?
It can be difficult. You might need to contact the EPFO help desk or the specific regional office that likely handled accounts for your old employer. Provide as much information as you remember: company name, location, period of employment, maybe an old payslip if you have one. They have search tools, but success isn't guaranteed if data is very old or incomplete.
My bank account shifted branches within the same bank, so only the IFSC changed. How do I update this in UAN?
Currently, updating just the IFSC for the same account number, unless it's SBI, often still requires you to submit a new bank KYC request through the portal, which then needs employer approval. It's treated like adding a new bank detail.
Why can't I add nominee details online sometimes?
Check a few things. Is your own profile, address, etc., fully updated? Is your UAN verified against Aadhaar? Do you have the nominee's Aadhaar number and a scanned photograph ready? Sometimes incomplete profile data prevents adding nominees.
Can I file an online claim if my date of exit in the old account is the same day as my date of joining in the new account?
Yes. That specific scenario, same day exit and joining, usually doesn't prevent online claim submission, assuming all other conditions, KYC, DOE updated, are met.
Even if my date of exit was after 2014, can I still submit an offline claim if needed? While online is strongly preferred and faster now, yes, the option for submitting physical forms generally still exists, but you'll likely still need UAN and Aadhaar details verified, and it will take longer to process.
What does the error same KYC seated against 2 or more UANs mean?
It means a specific KYC document, like your Aadhaar or PAN, has been linked to more than one UAN account. This creates conflicts. You need to identify which UAN is correct, ensure the KYC is linked only to that one, and potentially get the KYC delinked from the incorrect UAN via EPFO.
If I work for 2 companies at once, how do they handle my Doje DOE?
Both employers will use your single UAN. Each employer will manage the date of joining and date of exit relevant to their specific period of employment with you through their own employer portal login.
My employer put the wrong reason for exit, e.g. resignation instead of superannuation. How to fix it?
You need to contact the employer. They will have to submit a request to the PF office to get the reason for exit corrected in the records.
If my father's husband's name is wrong in my UAN profile, but correct in my Aadhaar PAN,
get it corrected in the UAN profile. Submit a joint declaration form through your employer, providing proof, like a HARPAN copy, showing the correct name.
how do I remove a bank account KYC that's stuck as pending verification?
You'll need to contact your employer and ask them to reject that pending KYC request through their portal login. Then you can submit the correct details again if needed.
Can my date of exit be different for EPF and EPS?
Yes, this can happen under specific circumstances, most commonly when a member continues working after age 58. They cease to be a member of the EPS at 58, so their EPS date of exit is marked as age 58. But their EPF membership and contributions continue until they actually stop working, so the EPF date of exit will be later.
Can my ex-employer enter different DOEs for EPF, EPS later?
Yes, under similar conditions related to age, crossing 58 while employed, the employer can mark the different exit dates retrospectively if needed.
What if I get an error KYC change pending with an unknown establishment?
This usually means a KYC update was initiated by a previous employer whose details might be unclear or incorrect in the system. You'll likely need to contact the relevant EPFO field office directly for help in resolving this.
Okay, let's switch focus a bit to international workers. IWs. Who exactly counts as an IW?
Right. An IW can be an Indian employee going to work in, or already working in, a foreign country that has a Social Security Agreement, SSA, with India, and they're eligible for benefits under that foreign country system. Or it's a foreign national holding a non-Indian passport working for an EPF-covered company in India.
And who is an excluded employee then?
An excluded employee is basically an IW who doesn't have to contribute to the Indian EPF. This could be because they are a detached worker, temporarily sent here from an SSA country and still contributing to their home country's Social Security, proven by a certificate of coverage, or it could be someone covered under a pre-existing agreement before October 2008 that exempted them.
So if an IW is not excluded, they have to join EPF.
Yes. Every non-excluded IW becomes a member from October 1st, 2008, or their date of joining an Indian-covered establishment, whichever is later.
Is there a minimum stay period in India required for them to be covered?
No. If they are eligible, foreign national in a covered job not excluded, they must be enrolled from day one of employment in India.
Is there a salary limit for contributions for IWs, like the $15K for domestic workers?
No, that's a key difference. There is no salary ceiling for mandatory contributions for international workers. Both the IW and their employer contribute on their full PF-eligible salary.
You mentioned Social Security agreements, SSAs. What do they do?
SSAs are basically treaties between India and another country to coordinate Social Security coverage for workers moving between the two. They generally aim to avoid double coverage, paying into two systems simultaneously, and allow workers to totalize or combine their periods of work in both countries to qualify for benefits, especially pensions.
Which countries does India have these agreements with?
India has signed quite a few, around 20, with most being operational. Think countries like Belgium, Germany, Switzerland, France, South Korea, Japan, Canada, Quebec, Brazil, Norway, Australia. The list is available on the EPFO website. Each SSA specifies a detachment period, how long a worker can be sent to the other country and remain covered only by their home system.
What about employees from countries that don't have an SSA with India?
If they are foreign nationals working in a covered establishment in India, they generally must contribute to the EPF as international workers.
What if an IW is paid in foreign currency?
Doesn't matter. They are still covered. Their contribution is calculated based on the Indian rupee equivalent of their salary, using exchange rates published by the State Bank of India, SBI.
Does this apply if a foreign national is hired directly by the Indian company, not sent from abroad?
Yes. If the Indian company itself is covered under the EPF Act, any foreign national they employ directly is generally covered as an IW, unless excluded for other reasons.
Are the withdrawal rules for pension, EPS, different for IWs from SSA versus non-SSA countries?
Yes, significantly. Generally, only IWs from SSA countries might be eligible for a withdrawal benefit from the EPS if they haven't completed the minimum service, usually 10 years, potentially using totalization provisions under the SSA. For IWs from non-SSA countries, withdrawal from the EPS scheme is usually not permitted.
And what about withdrawing their main PF accumulation?
That also differs. For IWs from SSA countries, the full PF amount is generally payable upon ceasing employment in a covered establishment in India. For IWs from non-SSA countries, withdrawal is typically allowed only upon reaching age 58, retirement, or in case of permanent total disablement.
What's the Certificate of Coverage, COC?
A COC is the document issued by the Social Security Authority in an SSA partner country. It certifies that a worker being sent to India is still covered under their home country's social security system. Presenting this COC makes them an excluded employee exempt from contributing to Indian EPF during the detachment period.
Does EPFO issue COCs for Indians going abroad?
Yes. EPFO is the competent authority to issue COCs for Indian employees being posted by their Indian employer to work in SSA partner countries, exempting them from contributing to the foreign country's social security system for the specified period. Regional PF commissioners usually issue these.
Are OCIPIO cardholders treated as IWs?
Yes, for EPF purposes, holders of Overseas Citizen of India, or OCI, or Person of Indian Origin, PIO cards, are generally treated as international workers if they meet the other criteria. Foreign passport, working in India.
Can IWs from SSA countries claim their Indian pension back in their home country?
Generally, yes. The SSAs usually contain provisions for exportability of benefits, meaning a person eligible for an Indian pension can claim and receive it even after returning to their home SSA country.
How does an employer get a COC for an Indian worker going to an SSA country?
It's an online process now. The employer applies through the EPFO's International Workers Portal, fills in the details, digitally approves it, and submits it online.
Are Nepalese and Bhutanese nationals considered IWs?
No. Nationals of Nepal and Bhutan are specifically treated as Indian workers, not international workers, under the EPF rules.
Just confirming the EDLI salary cap, is that also uncapped for IWs?
No, the contribution for the EDLI insurance scheme is capped at a wage ceiling, currently Rs. $15,000 per month for all members, including IWs.
If my resignation letter date is different from my actual last working day, which date is used for date of exit?
Usually the date of actual relieving from service or the last day the employee attended office is taken as the date of exit for PF records.
If my GOOB correction involves a difference of more than 3 years, what extra proof might be needed?
Besides standard documents, EPFO might ask for additional evidence like a medical certificate from a specified medical board assessing age or a court decree affidavit depending on the specific circumstances and guidelines.
Let's briefly touch on that COVID-19 relief scheme, PMGKY. What was its main goal for EPF?
The Pradhan Mantri Garib Kalyan Yojana, PMGKY, aimed to help low-wage earners under RSREIT's $15,000 a month in small establishments, up to 100 employees with a high percentage already in EPF, by having the government pay both the employees 12% and employers 12% share of EPF contributions for a few months, initially March to May 2020.
So the government paid the full 24%.
Yes, for eligible employees in eligible establishments. The idea was to increase take-home pay for employees and reduce the burden on small employers during the peak pandemic period.
Did the employer still have to pay anything?
Yes, employers were still liable for EDLI contribution and the EPF administrative charges for all employees, plus the full EPF APS contributions for any employees who didn't meet the PMGKY eligibility criteria.
Did it apply to exempted establishments?
No, the PMGKY relief for EPF contributions was generally not applicable to establishments having their own exempted PF trusts.
How did employers claim it?
They simply had to file their monthly electronic chal income return, ECR, ensuring they didn't deduct the employee's share for eligible workers. The system would then factor in the government contribution based on the ECR data. No separate claim form was needed.
Was there also a general reduction in contribution rates for a while?
Yes. Separately, the statutory contribution rate was temporarily reduced from 12% to 10% for both employee and employer shares for the wage months of May, June, and July 2020 for most establishments, providing broader liquidity relief.
Okay, switching back to general rules. If my employer deducts PF but doesn't deposit it, what can I do?
You should file a grievance on the EPFO's online portal, EPFGMS. You can also, as mentioned, potentially file a police complaint for breach of trust.
Can my employer recover their share of the PF contribution from my salary?
Absolutely not. That is illegal. The employer's share is their statutory liability.
Is my PF protected from court attachments?
Yes. Section 10 of the Act protects it from attachment under any court decree or order.
Does PF have to be deducted even if I haven't collected my wages yet?
Yes, the liability for deduction arises when wages are earned and due, regardless of when they are actually paid or collected.
What about contract workers? If the contractor defaults on PF, is the main company responsible?
Yes, the principal employer, the company that hired the contractor, has the ultimate responsibility to ensure PF compliance for contract workers engaged on their premises. They have the right to recover any dues paid on behalf of the contractor from the contractor's bills.
If I work for a branch office in a different state, am I still covered?
Yes, EPF coverage applies to the establishment as a whole, including all its branches across India.
What about honorary workers who don't receive wages?
No, if someone doesn't receive wages, they are generally not considered an employee for EPF purposes and are not eligible for membership.
Can I self-validate my Aadhaar with UAN online?
Yes, members can usually perform Aadhaar seeding and verification online through the portal or Umang app, often without needing employer intervention for the verification part itself.
If my salary is split, part paid in India, part abroad, how is PF calculated?
PF contribution is generally payable on the total salary earned related to the employment with the EPF-covered establishment in India, regardless of where parts of it are paid from.
If an Indian employee works abroad under an SSA, are they exempt from Indian PF?
Yes, generally. If an Indian employee is posted to an SSA country and obtains a certificate of coverage, COC, from EPFO, they contribute to the foreign system and are excluded from Indian PF for that period.
What exactly is included in monthly pay for calculating PF contributions?
It typically includes basic wages, dearness allowance, DA, and retaining allowance. Cash value of food concessions might also be included. It generally excludes things like HRA, overtime, bonus, commission.
When an Indian employee returns from abroad, do they just become a regular domestic worker again for PF?
Yes. Upon returning and rejoining covered employment in India, they revert to the status and rules applicable to domestic Indian workers.
How do international workers withdraw their PF online?
It depends. If they had Aadhaar and meet other criteria, some online options might be available. However, often, especially for non-SSA country nationals or those without Aadhaar, they need to submit physical claim forms attested by the employer or embassy consulate officials, depending on the circumstances.
And the conditions for when they can withdraw PF differ for SSA versus non-SSA.
Yes, as we discussed, SSA country IWs can usually withdraw on ceasing employment in India, while non-SSA country IWs typically have to wait until retirement age, 58, or disablement.
What about Indian employees working in non-SSA countries? Do they contribute to Indian PF?
If they're employed by an Indian company covered under EPF and are posted to a non-SSA country, they might still be required to contribute to the Indian EPF as domestic workers, unless specific exemptions apply. It depends on the terms of employment.
Okay, let's talk about TDS tax deducted as source. When does it apply to PF withdrawals?
TDS on PF withdrawals became more prominent based on Finance Ministry guidelines, effective generally from April 1st, 2022. It can apply during final PF settlement, transfers, including from exempted trusts, and potentially during annual interest crediting if contributions exceed certain thresholds.
What's the threshold related to contributions?
Tax is generally deducted on the interest earned if the employee's own contribution in the previous financial year exceeded Rs. $2,050,000. The interest earned on that excess contribution becomes taxable. TDS applies to the withdrawal of this taxable interest component. Also, TDS applies if the withdrawal happens before 5 years of continuous service and the amount exceeds Rs. 50,000, though this rule existed before.
Does TDS apply even if the member has passed away?
Yes, the tax liability and TDS rules apply even in death cases, based on the deceased member's record.
Does it apply to exempted trusts too?
Yes, exempted establishments trusts are also required to comply with these TDS provisions when settling PF claims or transferring funds.
And international workers?
Yes, the same TDS regulations apply to them as well.
What are the TDS rates if PAN is linked?
For a resident member with a valid linked PAN, the TDS rate is typically 10% on the taxable portion, like interest on excess contributions or premature withdrawal, if applicable.
Is there a minimum amount below which TDS isn't deducted for residents?
Yes, if the calculated TDS amount for a resident member is Rs. 5,000 or less in a financial year, TDS might not be deducted under Section 194A, although the income may still be taxable in their overall return.
What about non-resident members?
For non-resident members with a valid linked PAN, the TDS rate is generally 30% plus applicable surcharge and cess. However, if a double taxation avoidance agreement, DTAA, exists between India and their country and provides a lower rate, they can claim that lower rate by submitting required forms like Form 10F.
Is PAN mandatory? What if it's not linked or invalid?
Yes, members receiving taxable income are required to furnish PAN. If PAN is not linked or invalid, TDS is deducted at a much higher rate, often 20%, or the maximum marginal rate for residents, and potentially still 30% plus surcharges or DTAA rate for non-residents following specific income tax rules.
In case of death, whose PAN is used for TDS?
The PAN of the deceased member is used for TDS calculations, similar to a live member.
What forms are needed to claim DTAA benefits?
Typically Form 10F for self-declaration and potentially Form 10FB Chartered Accountant's Certificate, along with a tax residency certificate, TRC, from their home country.
When does the deductor, EPFO trust, need to deposit the TDS?
TDS deducted needs to be deposited with the government by specific due dates, usually by the 7th of the following month, using Challen ITNS 281.
Are there penalties for late deduction or deposit?
Yes. Interest is levied for non-deduction or delayed deposit of TDS.
And when do they file TDS returns?
TDS returns, Form 26Q for residents, Form 26Q for non-residents, are filed quarterly by specified due dates. Penalties apply for late filing.
What happens with TDS during fund transfers, like between EPFO offices or to an exempted trust?
Details about contributions, taxable components, interest, and any TDS already deducted must be clearly communicated using Annexure K when funds are transferred. This ensures the receiving entity has the correct tax history.
How is interest tracked for taxable versus non-taxable contributions?
EPFO maintains separate accounting for interest earned on contributions exceeding the Rs. 2.5 lakh threshold, the taxable part, versus the interest on the non-taxable part.
When I withdraw, which part comes out first, taxable or non-taxable?
The withdrawal is generally considered to be first from the taxable component of the PF accumulation.
When should I receive my TDS certificate, Form 16A?
The deductor, EPFO Trust, should issue Form 16A to the member within 15 days from the due date of filing the quarterly TDS return.
Will I lose money if interest isn't updated in my passbook immediately?
No, generally not. Interest is calculated for the full financial year and credited to the closing balance. Even if you withdraw mid-year before the passbook is updated, the interest due up to the date of settlement will be calculated and paid.
Can I see my job history across different companies in my e-passbook?
Yes, the ePassbook service usually allows you to view details and contributions related to different member IDs, previous employments linked to your UAN.
Recently, there's been talk about pension on higher wages based on joint options under Para 26. What proof is needed for that?
Yes, recent guidelines clarified the evidence needed. This can include proof of joint options submitted to EPFO, explicit permission from employer for higher contribution, wage details showing deduction on higher pay, copies of remittances, or letters from PF office confirming higher contributions, all dated before the relevant Supreme Court judgment cutoff.
What if the online application is missing some documents? Is it rejected?
No, the guidelines state that applications for validation shouldn't be rejected solely for missing documents. The regional PF commissioner is expected to coordinate with the employer to obtain the necessary proof.
Did this apply to exempted trusts too, if the joint request wasn't submitted to the trust?
Yes, the principles and procedures being followed by EPFO regarding validation of joint options for higher pension generally apply similarly to cases involving exempted establishments and their trusts.
How is the actual pension calculated for these higher wage cases?
The calculation formula remains as per paragraph 12 of the EPS 95 scheme, based on pensionable salary and service. The key difference is how pensionable salary is determined.
So how is pensionable salary calculated for them? 12 months or 60 months average?
It depends on the date of retirement pension commencement relative to September 1st, 2014. For those who retired before 010-920 it's generally the average of the last 12 months higher pay if pension started before that date, or last 60 months if pension started on after that date. For those retiring after 010-92014, it's generally the average of the last 60 months higher pay.
And for future retirees opting for higher pension?
Their pension will be calculated based on the EPS provisions prevailing at the time their pension commences, using the average of the last 60 months of higher contributions.
Are pension arrears paid out subject to TDS?
Yes, any arrears of pension paid will be subject to applicable income tax TDS provisions.
Wow, okay. We have really covered a huge amount of ground there. That was a proper deep dive into those EPFO FAQs.
It really was. Hopefully listening to this gives people that clear, comprehensive understanding of EPF, EPS, and EDLI we were aiming for.
Yeah, like an audio replacement for having to read all those official documents. We try to make it your shortcut to getting the key info.
Absolutely, and some key things really stand out, don't they? Like the safeguards protecting your PF money.
And how vital that UAN and keeping your KYC updated really is.
Definitely. And understanding the consequences, like for employers delaying contributions, or the specific conditions for eligibility and benefits under both EPF and EPS.
We really hope everyone listening takes a moment to think about how this applies to their own situation.
Yeah.
Is my UAN active? Is my KYC okay? Do I understand the transfer process now?
Exactly. This knowledge really is power when it comes managing this part of your financial future.
And if people still have questions or want us to explore something in even more detail.
Yeah, we'd love to hear that. Feedback helps us focus future discussions on what's most relevant for listeners.
Because ultimately, being well informed about these schemes is just so valuable, isn't it? They're a big part of securing your future.
Couldn't agree more. Understanding your rights, the processes, it just gives you confidence, empowers you to make the best decisions.
Well, thank you for taking this comprehensive audio journey with us. We truly hope it served as that effective replacement for plowing through dense documents. Hey you, ever get that feeling when you're looking at a pile of official documents, just wishing for a quick way to figure out what's actually important?
Yeah, like a shortcut through the jargon.
Exactly.
Yeah.
Well, you sent us some really interesting stuff about the EPFO, that's the Employees Provident Fund Organization.
A massive organization, really, handles provident funds for millions.
Hundreds of millions. And this material is all about how they're trying to communicate with everyone.
So think of this as your personal guided tour. We'll pull out the key bits about how they're changing up their communication game.
We've got the actual communication framework document here, which is quite something.
And a timeline showing how it developed, a study guide, even some briefings analyzing it all.
Our mission today: to cut through the noise, find the important stuff, maybe even some surprising facts you wouldn't expect from, well, a bureaucratic document.
Yeah, see how they're adapting to the digital world, basically.
Okay, let's dive straight into this communication framework document then. The preface itself is pretty telling.
It is. They call it a significant milestone. Seems they see it as a big step.
Their first real set of guidelines for, sharing information effectively in this day and age.
It's about setting clear communication goals across the whole EPFO.
And trying to avoid misunderstandings, right? Foster collaboration.
Exactly. So the why behind it all is pretty clear.
What are the main goals they lay out?
Well, externally, it's about building stronger relationships. Think employers, employees, they call them members, pensioners, unions, everyone.
How do they plan to do that?
Through communication that's clear, consistent, easy to access, responsive, and importantly, timely.
Sounds like the ideal, really.
Yeah.
The goal is trust, I suppose. Inform stakeholders.
That's the bottom line, fostering trust and making sure people actually understand the system.
But it's not just about looking outwards, is it? There's an internal angle, too.
Oh, definitely. A big part is promoting service excellence within EPFO and building brand awareness among their own staff.
So getting employees on board, understanding the rules, knowing how to communicate best.
Precisely. They even say every officer is basically a brand ambassador.
That's quite a statement.
It is. It ties into this idea of overcoming challenges and building that trust through open two-way communication, inside and out.
Okay, so that's the overall aim. But the framework also talks about guiding principles, doesn't it? What are the foundations here?
Yeah, they lay out a few core ideas. First up, they see communication as a leadership tool.
A leadership tool. How so?
To motivate and inspire employees, not just top-down orders, but using communication strategically to, get everyone working towards the same goals. Excellence.
Interesting perspective for a large organization.
It signals a bit of a shift, I think. Then there's a big emphasis on values and ethics.
Which must be crucial when you're dealing with so much personal information.
Absolutely critical. They'd stress accuracy, clarity, timeliness, and strict protection of personal data.
Accountability, too.
Yes, very clearly. Every communication is accountable for its quality and integrity. Can't just put anything out there.
Makes sense. What about interacting with people? They mention consulting and engaging stakeholders.
Right. This is key. It's not just broadcasting information at people.
So listening first.
Exactly. Listen before you provide information. Keep that engagement going. And tailor the communication based on who you're talking to.
Which leads nicely into the idea of segmenting stakeholders, I guess.
Precisely. They know a one-size-fits-all message won't work for such a diverse audience.
So break it down. Employers, employees, pensioners, maybe even smaller groups within those.
Yeah, encouraging their field offices to identify these groups for more targeted, more effective communication.
Okay, principles make sense. How does this translate into practice? What are the actual guidelines for, say, external communication?
Well, they want all their offices, zonal, regional, district, to be proactive.
Proactive, meaning?
Meaning actively reaching out, engaging stakeholders, not just sitting back and waiting for questions. It's a shift towards being more outward-facing.
That does sound different. What kind of info are they pushing out?
The focus is client-centric information. Stuff that's easy to understand, useful, about the schemes and services.
Making it easy to find what you need when you need it.
That's the goal. And they're committed to using language and channels that are accessible, inclusive, non-discriminatory. Everyone should be able to understand and reach the info.
And technology must play a huge role now.
Oh, absolutely. ICT, information and communication technology, is central.
Which specific tools?
They explicitly mention social media, Facebook, Twitter, YouTube, Instagram, Koo, even public app.
Wow, quite a list.
Yeah, they see these as key channels for getting information out there, simplifying things for users.
But how do they know if it's actually working, all this effort?
Good question. They have a whole section on evaluating communication effectiveness.
Okay, how do they measure it?
They use a mix. For social media, they look at quantitative stuff, reach, views, followers.
The usual numbers.
Right, but also qualitative things, analyzing comments, sentiment, even how long people watch their videos. Are people actually engaged?
Interesting. Beyond just follower counts, what about non-social media stuff?
Similar approach. Quantitatively, they track things like Are more people using online services? Are grievance numbers going down?
Okay, practical indicators.
And qualitatively, they look at the accuracy of forms people submit, like claim forms or transfer requests. If they're filled out correctly, it suggests the communication was clear.
I see. So fewer errors means better understanding.
Exactly. And it's not just measuring, it's about using that feedback, identifying weak spots, planning improvements, setting timelines, and measuring again.
A continuous improvement cycle.
That's the idea. They also briefly touch on crisis communication and the importance of regional languages, which makes sense given India's diversity.
Right. So we've talked about social media being key. What are the other major ways they're reaching out externally?
Well, social media is definitely a big one for updates, FAQs, campaigns, They even use infographics in local languages.
Smart. What else?
Webinars are another big focus. They have Prayas webinars specifically for people about to retire.
Guiding them through the pension process.
Yeah. And then field offices run regular weekly webinars to answer general stakeholder questions.
That sounds useful for direct interaction. Anything else stand out?
Yes. Needi Aapke Nikat, or NAN 2.0. This is a really interesting one.
What does that mean? Needi Aapke Nikat.
It translates roughly to your fund at your doorstep.
Ah, okay. So bringing the service to the people.
Exactly. Instead of people always having to go to an EPFO office, the EPFO goes out to the districts, usually on the 27th of the month.
That's a significant outreach effort.
It's huge. It's for grievance redressal, information sharing, right there at the local level. Very inclusive.
What other modes did they mention?
Keeping contact details updated is stressed. Using SMS for important updates and welcoming new members.
SMS is still powerful.
It is. And making sure all field offices have properly equipped public relations offices for people who prefer face-to-face help.
Let's dig a bit deeper into that NAN 2.0. It sounds quite central to their outreach.
It really seems to be. The goal is literally to have an EPFO presence in every district every month.
Wow. And making it accessible for everyone.
That's the aim, a direct platform for sorting out issues. The whole thing has a clear structure.
Like who's in charge?
Head office gives overall direction. Zonal offices pick nodal officers. Regional offices form the actual outreach teams.
And who's on those teams?
Usually a district nodal officer, an EO or AO grade, plus maybe 2 or 3 assistants, SSAs. They rotate staff too.
Where do these events happen? In the districts?
They aim for accessible places, like the district collector's office or maybe an industry's office, somewhere central.
And they let people know beforehand.
Oh yeah, lots of pre-publicity. Email, WhatsApp, SMS blasts handled centrally, local news, social media. They need to give the IT division notice for the SMS sends.
So a coordinated effort.
Definitely. They invite various stakeholders, and the head office even sets monthly themes for the events.
Themes, like focusing on a specific scheme.
Could be, yeah. Provides focus. And on the day, they set up properly. Banners, standees, digital where possible, regional languages too.
A visible presence.
And a service kiosk for helping with grievances, showing people online services, plus lots of information materials.
What actually happens during the program?
It's simultaneous service delivery and awareness sessions. They try to fix grievances right there.
What if they can't?
Then it gets formally logged into their online system, EPFI GMS, for proper tracking and follow-up.
Okay, systematic.
And afterwards, they send thank you notes, collect photos, short video stories of success to send back to head office.
Documenting the impact.
Exactly. And there's a whole reporting system, too. NAN report 01 to 05, tracking things at different levels.
That's incredibly detailed. Very proactive. Okay, let's shift gears slightly. What about internal communication? How do they keep everyone inside connected?
They list several channels. Email is obviously big. An e-office notice board for official stuff. Yep. Physical and online training. Circulars, manuals, standard operating procedures, a document management system.
Any modern tools?
Yeah. Cloud-based instant messaging for quicker team communication.
Anything else on the internal front?
They mention wanting a stress-free work environment, encouraging different opinions, even dissenting ones.
Building trust internally, too.
Seems like it. They're even thinking about having in-house counselors at the zonal level for employee well-being.
That's interesting. Linking internal well-being to external communication effectiveness.
Yeah, it seems connected.
So how did the head office and the field offices actually work together on all this communication stuff? What are the roles?
Well, the head office publicity division is kind of the central hub. They manage the main social media accounts, coordinate the big outreach programs like NAN 2.0, make those weekly YouTube videos.
Website management, press releases.
All that too. But they need content from other head office divisions, and those divisions have to vet everything before it goes out.
Makes sense. And the field offices, zonal, regional, district.
They have a lot of responsibility on the ground. Sharing and translating head office social media content, running those prayas and weekly webinars tailored to local needs.
And implementing NN 2.0 fully.
Exactly. Reporting, sticking to themes, using the materials, sorting grievances, getting those photos and videos.
Keeping local contact details current too.
That's on them as well, plus any other local publicity tasks that come up.
So it's a partnership, really. Central direction, local implementation.
That seems to be the model.
Okay, finally, the framework talks about overall communication strategies. What are the big strategic plays here?
Multilingual communication is a major one, really pushing to create awareness in all the scheduled regional languages and other local ones too.
Using different formats. Done by the field offices.
Yes. Another strategy is educating people about the online self-service options, trying to drive digital adoption.
Those YouTube videos fit in here.
Definitely. Regular, predictable posting schedule. Field offices reposting them locally.
What about engaging people more actively?
They're using social media and the MyGov platform for weekly quizzes.
Quizzes, like gamified learning.
Kind of, yeah, for awareness and engagement. They also do quarterly newsletters.
Internal and external.
Yep. Addy 10 internally on legal stuff, and an external one from publicity covering activities and video summaries.
Any traditional media.
They mention using radio jingles for wider reach and maybe hoardings, outdoor advertising.
And tying things to specific events.
Right. Using important national or cultural days to connect with people through relevant activities. There's actually a whole list of suggested days.
So a real mix of digital, traditional, and event-based strategies.
It's pretty comprehensive, trying to cover all bases.
So wrapping this all up, what's the big picture takeaway from this deep dive into the EPFO's communication plans?
For me, it really highlights EPFO's commitment to using communication strategically.
Right.
It's not just an afterthought. It's fundamental to improving services and satisfying stakeholders.
You can definitely see the evolution, like with Nidhi Apganikat becoming much more proactive.
Exactly. And they acknowledge this framework isn't set in stone. It's a living document they'll revisit.
The core idea seems to be, better communication means people understand their rights and benefits better.
Which helps EPFO serve them better. It's a virtuous cycle, hopefully.
Absolutely. I feel like I have a much clearer picture now, and hopefully our listeners do too, without needing to read, pages and pages of official documents.
It's impressive the structure they're putting in place for such a massive organization.
It really is.
Yeah.
And it makes you wonder, doesn't it?
About what?
Well, if an organization as huge and, let's face it, traditionally bureaucratic as EPFO can build such a detailed communication framework, could this serve as a model?
A model for other large government agencies, or even big private sector service providers.
Yeah. Could others learn from this, focus on clarity, engagement, and measurement? It's definitely food for thought.
It certainly is.
So if you, our listener, want to explore more, check out the EPFO website. It's at findia.gov.in.
Or look for their social media handles. As we've heard, they're pretty active.
Thanks again for sending in the sources and joining us for this deep dive.
Stay informed effortlessly. This has been The Deep Dive. You know that feeling, right? Staring at official forms, especially for something really important like your Provident Fund, it can honestly feel a bit overwhelming.
It really can. It feels like wading through jargon sometimes. And that's precisely why we're doing this deep dive today.
Exactly.
We've gone through, a whole stack of material, the official EPFO standard operating procedures, circulars from their head office, briefing notes, FAQs, the lot.
So we did the heavy lifting for you.
Pretty much. Think of this as your quick guide to understanding how EPFO claims actually get settled. We're pulling out the crucial bits, saving you the headache of reading those dense manuals yourself.
Right. And our mission here is pretty clear. We want to make the whole claim settlement process, from start to finish, how you submit it, how it gets checked, how the money lands in your account, just make it make sense.
Consider us your guides through this, yeah.
Yeah.
And it all stems from, fundamentally, the Employees Provident Fund and Miscellaneous Provisions Act of 1952. That's the bedrock.
The foundation for everything PF related.
Exactly. And under that act, you've got the three main schemes people interact with.
Yeah.
The EPF scheme itself from 52, that's your main savings pot.
Okay.
Then the Employees Pension Scheme, EPS, from 95, for post-retirement income. And the Employees Deposit Linked Insurance, EDLI, from 76, which is basically a life insurance benefit for your family if the worst happens. These schemes set the rules.
Got it. Okay, so let's start at the very beginning. How do people actually get these claim forms to the EPFO? What are the options?
Well, there are a few ways. The traditional route, sending it by post, is still quite common.
Okay, snail mail.
Yep. Or you, the member, or someone you authorize, can hand it in directly at an EPFO field office.
In person.
Right. Sometimes the employer's representative might submit forms for employees too. And importantly, for transfer claims moving your PF when you change jobs, using Form 13, there's an online option now.
Ah, online. That's good.
Definitely. And some offices also have drop boxes where you can just physically leave your completed form.
So several ways in. Now, you mentioned forms. I hear there's been a change there, old forms being replaced.
That's a really key update, yes. The forms many people might remember, like Form 19 for final settlement, 10C for pension withdrawal, and 31 for advances. They've been replaced.
Replaced with what?
They brought in something called the composite claim form. Makes things simpler. There are basically two main versions you need to know about.
Okay.
There's the composite claim form, ADHAR, and the composite claim form, non-ADHAR.
Right, ADHAR and non-ADHAR. What's the big difference? Why two forms?
The main difference, and it's a big one for convenience, is about employer attestation. You know, getting your boss to sign off on it.
Ah,
With the ADHAR-based form, if your details in Form 11, that's the one with your joining info and KYC, your ADHAR number and your bank account are all linked up correctly on the UAN portal, and your UAN is active.
lots of ifs there, but okay.
Ha, yes, the digital ducks need to be in a row, but if they are, you can submit that ADHAR form directly to the EPFO. No need for your employer's signature.
That is a big deal. Skips a whole step. So the non-ADHAR form is for when those links aren't in place.
Exactly. If your ADHAR and bank details aren't linked and verified on the portal, or maybe your UAN isn't activated yet, then you typically use the non-ADHAR form, and that one does generally need your employer's attestation.
Okay, that distinction is clear now. Let's talk about withdrawals, specifically partial withdrawals or advances. What documents do you actually need these days? I feel like this used to be complicated.
It definitely used to involve more paperwork, but here's some really good news. They've significantly simplified the documentation for many common reasons.
Like what, for example?
Okay, think about withdrawals for housing. Buying a plot, constructing a house, buying a ready house or flat, making alterations or additions, even repaying a home loan.
Right. All major housing needs. What's needed?
Get this, for all of those housing-related reasons, you don't need to submit any additional documents alongside the composite claim form.
Seriously, no extra papers at all.
None. The old requirements, like a new declaration form or a utilization certificate for housing loans, they're gone, scrapped.
Wow. What about other common reasons like marriage or education?
Same simplification applies. Withdrawals for the marriage of yourself, your son, daughter, brother, or sister, no extra documents needed.
Okay.
For the post-matriculation education of your children, again, no documents required with the form.
That's quite something. Any other situations like that?
Yes, even things like if your factory faces a lockout or closure, or there's a power supply cut affecting your establishment, or unfortunately, in case of a natural calamity. For withdrawals related to these, still no extra documents needed.
So the main takeaways for a lot of common life events, housing, family obligations, education emergencies, the paperwork hurdle has been lowered significantly.
Massively lowered. It's a definite move towards self-certification based on the details you provide in the composite form itself.
Are there any situations left where you still need supporting documents for a partial withdrawal?
Yes, a few specific ones remain. If you're withdrawing due to illness, your own or a family member's on Moja, you generally need a certificate from the doctor, and also one from your employer confirming that you don't have access to ESI Corporation facilities.
Okay. Health-related withdrawals still need proof.
Correct. And also, if you need funds to purchase equipment required due to a physical handicap, you need to submit a medical certificate for that.
Makes sense for those specific cases. But for the broad categories, it's much simpler. Is there anything everyone needs to provide regardless of the reason?
Yes. Good point. You generally always need to attach either a canceled check leaf from your bank account or a self-attested copy of the first page of your bank passbook.
To verify the bank account details.
Exactly. It needs to clearly show your name printed on it. And a tiny bonus, you don't need that 1 rupee revenue stamp anymore either.
Every little helps. Okay, now shifting to a more difficult topic, what happens when a member passes away? How are death claims handled? Is that process still complex?
It's obviously a very tough time for families, and the EPFO has tried to make this process more consolidated and, importantly, faster.
How so?
They've introduced a specific composite claim form in death cases. This one form replaces the older separate forms, like Form 20 for PS settlement, 5IF for the insurance benefit, and 10D for the pension claim.
So one application covers everything. PF, insurance, pension.
Yes, exactly. The nominee or legal heir or surviving family member fills out this one composite form to claim all the applicable benefits at once. It's designed to be less burdensome.
That sounds like a significant improvement. What documents do they need to submit with this death claim form?
Typically, you'll need the member's death certificate, naturally. Also, a joint photograph of all the claimants. If children are claiming pension benefits, you'll need their birth certificates. And if the deceased member had a pension scheme certificate, that needs to be attached too.
Okay, standard proofs needed for such a claim. You mentioned speed.
Yes, and this is crucial. The EPFO has mandated that death claims must be settled within 7 days from the date of submission.
7 days. That's remarkably fast for an official process.
It is. It really highlights a commitment to providing financial support quickly when families are most vulnerable.
Absolutely. So whether it's a withdrawal or a death claim, once the form is submitted, what happens next? Who actually looks at it? Can you walk us through the process behind the scenes?
Sure. So the form lands, maybe via post, maybe handed in. The first stop is usually the DA receipt, or the PRO, the dealing assistant at the receipt counter, or the public relations officer. They do an initial check.
Just a basic check.
Yeah, make sure it looks complete, the right form is used, sort of a first pass. Then it goes to the DA accounts, the dealing assistant in the account section. This is where the detailed scrutiny happens.
What are they checking specifically?
A whole range of things. Is the amount actually payable? Is the form filled out completely and correctly? Are all the signatures there? If it's a non-ad har form, is the employer's attestation present? Are any required supporting documents attached? Has the member observed any necessary waiting period if they've just left a job? Crucially, do the member's details, name, father's name, date of birth, match the records? And are the bank details correct and verifiable?
So the DA accounts is really digging into the details and comparing against their system records. What happens after their check?
After the DA accounts verifies everything, the claim moves up the chain. It goes to either a section supervisor or an account officer or AO.
And their role?
They perform a 100% check on the work done by the DA accounts. They're basically the final verifiers of accuracy before payment is approved. They authorize the claim payment itself.
Is there a difference between the supervisor and the AO in terms of what they can approve?
Yes, there's a financial limit. Section supervisors can typically authorize payments up to Rs. 25,000. For claims exceeding that amount, it has to be authorized by the higher level account officer. It's a system of checks and balances.
Got it. So verified, authorized. How does the money actually get moving?
Right, once authorized, the next step involves the scroll assistant, another DA. Their job is to generate the payment scrolls. Think of these as consolidated lists of approved payments ready to be processed.
Okay, the payment list.
Then it goes to the cash section. You have the DA cash and the APFC cash, that's the Assistant Provident Fund Commissioner for cash. They prepare everything for the actual disbursement and send the payment instructions to the bank, usually via an OEFT, the electronic transfer system.
So the money gets sent electronically to the member's bank account.
Precisely. For pension cases, it's slightly different. There's a DA, pension, and pension disbursement cell involved in generating and sending out the pension payment orders. PPOs.
It's quite a journey for one form. Now, you mentioned earlier the online option for transfer claims when changing jobs. Can we dive into that a bit more, the OTCP?
Sure. The Online Transfer Claim Portal, or OTCP, is a really useful tool. If you're registered on the EPFO's member portal, which many employees are now, you can submit your transfer claim, Form 13, completely online. No physical paper needed initially.
And how does the verification work online?
You get a choice. You can opt to have the claim attested digitally by either your present employer or your previous employer. The key is that the employer you choose must have their digital signature certificate, DSC, registered with EPFO.
So you need an employer with a DSC on board.
Yes. And before you start, it's always a good idea to check your eligibility for online submission on the EPFO website itself. It guides you through the requirements.
Seems much smoother for job changers. Are there any catches or specific situations to be aware of with the OTCP?
There's one main exception to the fully online process. It involves exempted PF trusts.
Exempted trusts, what are those?
Some large companies manage their employees' PF funds through their own private trust, which has been granted an exemption by the EPFO. If your previous employer was one of these exempted trusts, then even though you initiate the transfer request online through the OTCP, you also still need to submit a physical signed printout of that Form 13 directly to that exempted trust. The online system usually helps you generate this printout.
So a bit of a hybrid process for exempted trusts. Online initiation, but still need that physical form step.
Correct. And generally, whichever employer you choose for the online attestation, present or previous, you'll likely need to print the online form, sign it, and give it to them anyway, so they have the physical basis for their digital approval.
Right. Makes sense. What about accounts that have gone quiet for a long time? Inoperative accounts, I think they're called. How do you claim from those?
Yes, inoperative accounts. That's where no contributions have come in for 36 months or more. Understandably, there are some extra checks for claims from these.
To prevent fraud, I imagine.
Exactly. So if the company you work for is still functioning, the claim form must be attested by that employer.
Okay, employer verification is mandatory if they still exist. What if the company is closed or the employer can't be traced?
In that situation, you need to get the claim form attested by an authorized official of your bank, the one where you hold your account.
Bank attestation instead.
Yes. Plus, you'll also need to provide KYC documents.
Yeah.
Know your customer documents. Typically one for proof of identity and one for proof of address.
So extra steps to verify identity if the account's been dormant and the employer isn't available. That covers a tricky situation many might face. Finally, with all these new forms and processes, especially the composite forms, have the EPFO's computer systems kept up?
Oh yes, they've had to make significant technical upgrades to their main software, the EPFO web application. It's been adapted to handle these composite claim forms efficiently.
How so?
Well, for instance, the system can now differentiate between an Aadhaar-based claim and non-Aadhaar-based claim right from the data entry stage. If someone tries to enter an Aadhaar-based claim, the system automatically checks if that Aadhaar is actually linked to the UAN in their database.
And if it's not linked?
The system won't even let them save the claim entry. It enforces that link requirement. It also applies different data validation rules depending on the form type, and ensures the workflow follows the correct authorization limits we talked about earlier. The R's 25,000 threshold for supervisors, for example.
So the tech is underpinning the process changes, making sure the rules are followed systematically.
Absolutely. The technology is crucial to making these streamlined processes work smoothly and securely.
It really sounds like overall there's been a concerted effort to simplify things for members, cut down paperwork, and use technology to make it happen.
That's definitely the big picture here. This whole deep dive hopefully has shed light on that. We've seen the move to composite forms, simplifying applications, the massive reduction in documents needed for common withdrawals.
That was a big one.
Yeah. Plus, the faster settlement target for death claims, the convenience of online transfers, and still having those important checks and balances behind the scenes.
It really has been illuminating. And it makes you think, doesn't it? Are you, as a member, aware of these changes? If your Aadhaar is linked, are you using that simpler direct submission route? It's definitely food for thought.
It really is. And look, while we've covered the main ground, specific situations can always vary. So if you need more detail on your unique case or just want the absolute latest updates, the best place to go is always the official EPFO website.
Good advice. Empowering yourself with that knowledge is key.
Exactly. Being informed puts you more in control of your own financial future and your hard-earned savings.